how do you see sentiment on Dalal Street against the backdrop of a very heavy event-led week, the one that we are starting today?
So, Shail, let me take off on what you were saying in the earlier part of the program. I happened to log in early and listen to you. And what I could see is that, you pointed a graph out on the US Treasury bills. I think that is the most significant chart that is going to drive global markets. So, what are the things impacting that? One is that obviously the debt is completely out of control. Second thing is that, here we are on one hand, we are talking of uh, job markets not doing well, and we are talking of a rate cut. But, here the yields are going up. So, I think what we should be looking at is the yields, because ultimately that is what the market is telling you. And to my mind, a lack of confidence in the American economy is going to drive the rates up no matter what kind of rate cuts you take, right? So, and that is the thing
Ah.
which is a trend that is picking up, right? And today what is happening is that return of capital is going to become more important than the return on capital as far as the US markets are concerned. Okay, and that is going to be the market for the global markets as such. So, today there was a report which said that the US net savings rate is negative $22.5 trillion. Okay. And all that is being propped up by the European flows into the US markets, right? So, as long as this is intact, you can expect the can being rolled down the road. But I don't think that it can happen far too much into the future. And the US Fed government will have to take to pump priming the economy, or printing money, or they would have to call for severe catastrophic actions where they will have to really really take disciplinary action to cut the debt. Okay. And I wanted to point out a couple of things to you, irrespective of who comes to the government to form the government. If you believe that Trump will form the government, then you must understand his chief man who is going to bell the cat is going to be Elon Musk. And if you've seen what he has done with the Twitter, he made it bare bones and then built it from the ground up. Then you can expect him to be true to his character and do exactly that. Cut fiscal spending ruthlessly. And if he were to do that, I think there would be a sudden kind of a attack that the US economy will face, which will be temporary, good for the economy, and then the markets do their job. But that would mean pain for the global economy in the short run. On the other hand, if you have the existing incumbent, which is Kamala Harris, come in, then what is going to happen is that they're going to blow away their fiscal deficit to oblivion with the kind of policies that they are running. So that too is negative for the interest rates and for the dollar markets. So that will also ensure that money goes out of the US, and that is going to create a kind of a unknown animal. How to play with it. So both are very risky events. And for me, I think if you were to draw your go back to basic theory of economic investing, money goes into equities as long as the risk premium justifies the premium over the bond markets. And to my mind, I think that the premium is the risk to that premium is going to see money flow from equities to bonds.